The Chinese GDP figures were released this morning, and now I'm joined by Dr. Thomas Maher, who is Senior Advisor at Deutsche Bank in Frankfurt. Dr. Maher, global equities rose as China's second quarter growth data met official forecasts, while the dollar made further gains as markets continued to price in a tapering of asset purchases by the US Federal Reserve. Were you expecting this?
Well, it's a positive surprise that the Chinese data met the expectations, and I think the market felt reassured about the pace of Chinese growth. And this, I think, was one factor that has helped in the overall positive tone that we have seen from the markets. But I wouldn't directly relate this to the performance that is happening in the U.S. I think the people have been short, and when Mr. Bernanke the other day softened somewhat the message on tapering, they were caught in a short squeeze. And they're now very careful ahead of Mr. Bernanke's testimony later this week. So I think it's really a question of how Mr. Bernanke will speak at the upcoming hearings. And I think the market is positioning itself here for a reasonably dovish tone.
China's economy expanded by 7.5% in the second quarter, a second consecutive quarter of weaker growth, but a relief after much worse than anticipated trade data had led to fears of a more dramatic economic slowdown. So is there still cause for concern right now?
Well, I think the concerns have always been with us that the slowdown in Chinese growth would be too abrupt. And the data actually were not that bad for this. When you look a bit at what has produced these numbers, we see that the external side has weakened, investment has weakened, but that's exactly what the new leadership wants, because they want to get the economy to move away from the heavy reliance on export growth, and they don't want to have the economy to live on the drug of ever rising easy credit and investment. That all seems to be working its way now through the economy. At the same time, we have seen a strengthening in consumption. So far, I would say this is exactly what they were looking for, and they got it.
In the next few months, do you think this slowdown may deepen? And if it does, how will it affect the Eurozone?
I think it will very much depend on what the Fed is going to do. As we have all been able to see, they haven't been really very clear in their message. It has been interpreted at some stage very hawkish, then they corrected towards dovish. I think if Mr. Bernanke comes back to the hawkish line, if he forces U.S. yields higher, then we will see this in the periphery. The periphery of the euro area trades, in my view, now pretty much as emerging market debt. And they will be hit hard if there should be another round of sell-off, as we have seen it in May after Mr. Bernanke's first speech.
What can China focus on right now to increase growth in the next quarter?
I think they must look at engineering a soft landing of the credit bubble. And in this regard, they have to watch very closely the banking sector, credit developments. They don't want to have the hard landing the U.S. experienced after the collapse of Lehman. So I would watch the credit data. I would also watch the consumption data, as they are supposed to offset any slowdown on growth which comes from the external side in investment.
And finally, how bad do you think GDP growth would get before the government responds with policy measures such as fiscal or structural reforms?
I think if we go below 7%, they will get concerned.
So 7% is the turning point. And that's all we have time for. Thanks to Dr. Maher for joining us today. And we'll be back with more from the economic calendar during the week. Bye for now.